Imagine waking up tomorrow to the news that the person who supports your family financially is suddenly gone. The bills are still due, the mortgage isn't magically paid, and college tuition for the kids doesn't pause. For many people, this is a reality they never planned for, and yet it could happen to anyone at any time. Did you know that nearly 40% of Americans would struggle to cover their monthly expenses within just a month if the primary earner passed away? It's a startling number, but it highlights a truth we often avoid thinking about. Life is unpredictable, and financial security isn't guaranteed. That's why life insurance exists, not as a morbid idea, but as a powerful safety net that ensures your loved ones are protected no matter what happens. In this video, we're going to break down everything you need to know about life insurance in the U.S., from the different types of policies and who needs them, to how much coverage is enough, and the smartest ways to purchase it. By the end of this video, you will have the knowledge to make informed decisions that can provide lasting security and peace of mind for yourself and your family. Life insurance might seem complicated at first glance, filled with confusing terms, different policy types, and fluctuating prices. But it doesn't have to be overwhelming. At its core, it's simply a contract between you and an insurance company. You pay a premium, and in return, your beneficiaries receive a financial payout when you pass away. This payout can help cover everyday expenses, pay off debts, fund future goals like college or retirement for your loved ones, or even leave a legacy for generations to come. Understanding life insurance isn't just about protecting money, it's about protecting the life and well-being of the people who matter most to you. Over the next few minutes, we'll take a deep dive into how life insurance works, why it matters, and how to make the choices that fit your unique situation. Whether you're young and just starting out, building a family, or planning for the future, this information will equip you with the clarity and confidence you need to take action. By the time we're done, the mysteries of life insurance will be gone, replaced by practical knowledge and a plan that ensures your loved ones are financially secure no matter what life throws your way. Life insurance is often misunderstood, but at its heart, it's a simple concept. It's a contract between you and an insurance company where you agree to pay regular premiums, and in return, the company promises to pay a specified sum of money to your beneficiaries when you pass away. Think of it as a financial safety net, something that protects your loved ones when you are no longer there to provide for them. Life insurance isn't just about money, it's about peace of mind, security, and ensuring that your family can maintain their lifestyle, pay debts, and achieve future goals even if something unexpected happens. The main purpose of life insurance is to replace lost income. If you're the primary earner in your household, your sudden absence could leave your family struggling to cover daily expenses, rent or mortgage, utilities, and education costs. Life insurance ensures that your loved ones don't have to compromise on their lifestyle or make difficult financial sacrifices during a time of emotional distress. Beyond income replacement, life insurance can also help cover debts like credit cards, car loans, or personal loans, so your family doesn't inherit financial burdens. It can also play a role in estate planning, helping cover taxes or leaving a legacy to future generations. Life insurance works in a surprisingly straightforward way. You choose a coverage amount that reflects your financial responsibilities and future goals, pay premiums based on your age, health, and policy type, and then in the unfortunate event of your death, the insurer pays out the death benefit to the people you've named as beneficiaries. This payout is typically tax-free, which means your loved ones receive the full amount without deductions. One of the key advantages of life insurance is its flexibility. Different policies offer different levels of protection, and some can even build cash value over time that you can borrow against or use in your lifetime. Many people put off buying life insurance because they think it's only for older individuals or those with significant assets. The truth is, life insurance is for anyone who has people depending on them financially. Whether you're a young parent, a single earner, a business owner, or even someone just starting your career, life insurance provides security and peace of mind. By understanding what life insurance is and how it works, you're taking the first step toward ensuring that your loved ones are protected, no matter what the future holds. It's not just a policy, it's a promise to care for your family even when you're not there. Life insurance is not one size fits all. There are several types of life insurance policies, and understanding their differences is crucial for choosing the right one. The most common types are term life insurance, whole life insurance, universal life insurance, and variable life insurance. Each has unique features, advantages, and limitations, and the best choice depends on your financial goals, budget, and the level of coverage you need. Term life insurance is the simplest and most affordable type. It provides coverage for a specific period, such as 10, 20, or 30 years. If you pass away during the term, your beneficiaries receive the death benefit. However, if you outlive the term, the policy ends and no payout is made. Term life is ideal for people who want coverage for specific financial responsibilities, like raising children, paying off a mortgage, or covering debts. Because it doesn't build cash value, the premiums are generally lower, making it an attractive option for young families or anyone on a budget. Whole life insurance, on the other hand, provides coverage for your entire life, as long as premiums are paid. It also has a cash value component that grows over time, which you can borrow against or even use as an investment tool. Whole life policies are more expensive than term insurance but offer long-term security and financial benefits. This type of policy is suitable for people who want lifelong coverage, estate planning benefits, or a way to accumulate cash value over time. Universal life insurance is a flexible alternative. It allows you to adjust your premium payments and death benefit over time. Part of the premium goes toward coverage, and part goes into a cash value account that earns interest. This flexibility is useful for people whose financial circumstances may change, such as business owners or those expecting fluctuating incomes. Variable life insurance takes this one step further by allowing the cash value to be invested in stocks, bonds, or mutual funds. While this can potentially increase returns, it also carries more risk, as the cash value depends on market performance. Choosing the right type of life insurance depends on your goals, budget, and risk tolerance. For instance, if your primary concern is protecting young children until they're financially independent, a term policy may be sufficient. If you want lifelong coverage with an investment component, whole or universal life insurance might be the better choice. Variable life insurance is suited for those comfortable with investment risks and seeking higher potential growth. Understanding these types ensures you select a policy that aligns with both your immediate and long-term financial objectives. Many people think life insurance is only necessary for older adults or those with substantial assets, but in reality, anyone with financial responsibilities can benefit from it. The most common candidates are parents, single earners, business owners, and people with significant debt. However, life insurance can be relevant at almost any stage of life. It's about protecting the people who depend on you financially, regardless of age or wealth. Young families are perhaps the most obvious group. If you have children, life insurance ensures that they can continue to live comfortably, go to school, and achieve their goals even if one parent passes away unexpectedly. Single parents especially need coverage because they are the sole provider, and without life insurance, their children could face serious financial hardship. Life insurance provides not only income replacement but also stability during a time of grief. Business owners also benefit from life insurance. If a key partner or owner passes away, life insurance can provide the funds needed to cover business debts, protect employees, or buy out the deceased owner's share. It acts as a safeguard for both the family and the business, preventing financial turmoil that could jeopardize livelihoods. People with significant debt, such as mortgages, car loans, or student loans, should also consider life insurance. Without it, these debts might fall on family members, creating unnecessary stress during an already difficult time. Even young adults without dependents may benefit from life insurance. While it may seem unnecessary, securing a policy early often means lower premiums, and some policies can even build cash value that can be used later. It is also a smart way to protect co-signers or loved ones who might be financially responsible for certain obligations. Life insurance is not about fear. It's about planning, foresight, and ensuring that your loved ones are not left struggling financially when life takes an unexpected turn. Ultimately, anyone with people depending on them or financial responsibilities should consider life insurance. The coverage can be tailored to fit your circumstances, whether it's a modest-term policy for young parents or a comprehensive whole-life policy for estate planning. By evaluating who relies on your income, the debts you carry, and the future needs of your family, you can make informed decisions and provide security that lasts a lifetime. Life insurance is not just a safety net. It's a financial tool that provides stability, peace of mind, and protection for the people who matter most. Determining the right amount of life insurance coverage is critical because too little coverage may leave your family vulnerable, while too much can strain your budget unnecessarily. The goal is to ensure that your loved ones can maintain their lifestyle, pay debts, fund education, and meet long-term financial goals without your income. There are several methods to calculate coverage, ranging from simple rules of thumb to more detailed financial planning approaches. A common starting point is the income replacement method. This involves multiplying your annual income by a certain number, often between 10 and 15 years. For example, if you earn $70,000 a year, a coverage amount of $700,000 to $1,050,000 might be appropriate. This approach ensures that your family can replace your income for a reasonable period while adjusting to life without your support. It's simple, fast, and works well for many families, though it doesn't account for specific debts or future expenses. Another approach is to calculate your total financial obligations. This includes outstanding debts like mortgages, car loans, credit cards, and personal loans, as well as future expenses such as college tuition, weddings, and retirement needs for a spouse. By adding up these costs, you arrive at a more tailored coverage amount that directly addresses your family's financial requirements. Some financial planners also recommend including a buffer for unexpected expenses, medical costs, or inflation, ensuring that your family has ample resources for years to come. Existing assets, like savings, investments, and retirement accounts, should also factor into your calculation. If you have substantial savings or other sources of income, you may need less life insurance, whereas minimal savings may necessitate higher coverage. Some people prefer a hybrid approach, combining the rules of thumb method with detailed expense calculations to find a balanced and realistic coverage amount. Ultimately, the key is to ensure that your coverage aligns with your family's unique needs and financial situation. It's not about guessing. It's about planning thoughtfully and realistically. By carefully considering income replacement, debts, future obligations, and existing resources, you can determine a life insurance amount that truly protects your loved ones. This ensures peace of mind, knowing that no matter what happens, your family's financial future is secure. The cost of life insurance varies widely depending on a range of factors, and understanding these can help you make smarter choices and find a policy that fits your budget. Premiums are determined by a combination of personal characteristics, policy type, coverage amount, and lifestyle factors. Knowing how these elements affect the price can save you money and help you get the coverage you need without overpaying. Age is one of the most significant factors. Generally, the younger you are when you purchase a policy, the lower your premiums. This is because younger people are considered lower risk by insurance companies. Health status is another major consideration. Insurers look at medical history, current conditions, medications, and sometimes family health history. People who are in excellent health typically pay less, while those with chronic conditions may face higher premiums or need specialized policies. Lifestyle choices also play a role. Smoking, excessive alcohol consumption, or risky hobbies like skydiving or scuba diving can increase premiums. Even occupation matters. Jobs considered high risk, such as construction or aviation, may result in higher rates. The type of policy you choose also influences cost. Term life insurance is generally the most affordable because it only provides coverage for a set period and doesn't accumulate cash value. Whole life or universal life policies are more expensive because they offer lifelong coverage and may build cash value or include investment components. Coverage amount is directly tied to cost. The higher the death benefit, the higher the premium. Insurers also consider policy length for term insurance. A 30-year term will cost more than a 10-year term because there's a longer risk period. Some policies may require medical exams or underwriting, which can affect rates, while others offer simplified or no-exam policies at slightly higher costs. Shopping around, comparing quotes, and understanding the fine print are essential steps. Minor differences in policy terms, fees, or coverage options can make a big difference in premiums. It's also important to review your life insurance periodically as your circumstances change. Age, health, income, and family responsibilities can all influence your coverage needs and costs. By understanding what drives life insurance premiums, you can make informed decisions that balance affordability with the protection your loved ones deserve. Buying life insurance may seem daunting, but breaking it into clear steps makes the process manageable and ensures you get the right coverage. The first step is to assess your needs. Consider your dependents, debts, income, and future obligations. Decide how much coverage you need and for how long. This will guide your choice between term or permanent policies and help you narrow down suitable options. Next, research and compare policies from multiple insurers. Use online quote tools, consult agents, or speak with financial planners. Pay attention to the death benefit, premium amount, policy type, and any riders or additional features that may enhance coverage. Riders, like critical illness or disability coverage, can provide extra protection but may increase the premium, so weigh their benefits carefully. Once you've identified a few potential policies, the application process begins. Many insurers require a health questionnaire and sometimes a medical exam. Be honest about your health, lifestyle, and family history. Misrepresenting information can lead to denied claims later. Some policies, particularly simplified or guaranteed issue life insurance, may not require exams, but these often come at a higher cost. After submitting your application, the insurer will review your information and determine your premium. Once approved, you'll sign the contract, pay your first premium, and the policy becomes active. It's essential to read the fine print, understand exclusions, and know exactly what is covered. Some people prefer working with an agent to clarify terms and answer questions, while others handle everything online. Finally, maintain your policy by paying premiums on time and reviewing coverage periodically. Life circumstances change. Marriage, children, new debts, or increased income may require adjustments to your policy. Keeping your coverage aligned with your needs ensures that your life insurance continues to provide the protection your family relies on. By following these steps thoughtfully, buying life insurance becomes a straightforward process that delivers security and peace of mind for you and your loved ones. Life insurance is surrounded by myths and misconceptions that often prevent people from buying the coverage they need. One common myth is that life insurance is only for older individuals. In reality, buying a policy when you're young can secure lower premiums and provide long-term protection. Another misconception is that life insurance is too expensive. While costs vary depending on age, health, and policy type, term life insurance is often surprisingly affordable, even for young families or individuals on a tight budget. Some people believe they don't need life insurance if they are single or don't have children. While dependents are a key reason to buy insurance, even single people may have debts, co-signed loans, or family members who would face financial strain without coverage. Another mistake is underestimating the coverage amount. Many people buy policies that are too small to cover debts, living expenses, or future obligations, leaving families vulnerable. It's crucial to calculate needs carefully and choose a policy that provides sufficient protection. Choosing the wrong type of policy is another common error. People sometimes pick whole life insurance for short-term needs, paying higher premiums than necessary, or rely solely on term insurance without considering long-term goals. Policy lapses due to missed payments, not updating beneficiaries, or failing to review coverage as circumstances change can also lead to problems when protection is most needed. Finally, not comparing policies is a frequent mistake. Different insurers offer varying rates, riders, and terms, and a small difference in premiums or coverage details can have a significant impact over time. By educating yourself, understanding the myths, and avoiding common mistakes, you can select a policy that truly meets your needs. Life insurance is not just about money, it's about planning, foresight, and protecting the people you care about most. Making informed decisions ensures that your family will be secure, your financial obligations met, and your peace of mind intact. As we wrap up, it is important to remember that life insurance is more than just a financial product. It is a promise to the people you care about most. It's about ensuring that your loved ones are protected, your debts are covered, and your family can continue living their lives without facing unnecessary financial hardship if the unexpected happens. Throughout this video, we've explored what life insurance is, the different types of policies, who needs it, how much coverage to get, the factors that affect cost, how to buy it, and common myths and mistakes to avoid. Each of these pieces forms a complete picture, showing how life insurance fits into your overall financial plan and why it matters so much. The key takeaway is that life insurance is not just for older people, the wealthy, or those with families. It's for anyone who has people depending on them or financial responsibilities. Even young adults, singles, and small business owners can benefit from having a policy in place, and buying early often means lower premiums and more flexibility over time. Life insurance provides security and peace of mind, allowing you to focus on living your life and building the future you want without worrying about leaving your loved ones vulnerable. It's also crucial to approach life insurance thoughtfully. Calculate your coverage based on real needs, debts, and future goals rather than guesswork or rules of thumb. Compare policies, understand the fine print, and choose a type of policy that aligns with your financial situation and long-term objectives. Avoid common pitfalls like underestimating coverage, relying on misconceptions, or neglecting to review your policy as circumstances change. By doing so, you'll ensure that your life insurance truly serves its purpose when it's needed most. Finally, think of life insurance as a tool for empowerment, not fear. It allows you to take control of your family's financial security, plan ahead, and make decisions today that will protect tomorrow. Your policy is more than numbers on a paper. It's a commitment to the people you love, a safety net that stands even when you can't. Taking the time to understand life insurance, selecting the right coverage, and keeping it up to date is one of the most responsible financial steps you can take. So today, take a moment to assess your situation. Think about the people who depend on you and make a plan. Life insurance is an investment in peace of mind, stability, and the future of your loved ones. Remember, it's not just about money. It's about ensuring that your family is cared for, no matter what life throws your way. Start today, secure tomorrow, and give yourself the confidence that comes from knowing your family is protected.